Dollar yen daily forecast January 31st, fxempire.com. The dollar yen pair fell on Monday and has even broken down below the obvious 76.50 level. To give you an idea of how obvious this level has been, you can zoom out and you can see over the last several months, going all the way back to July, this is a level that has produced some kind of reaction in this pair. Now, obviously, somebody with a lot of money, which would pretty much leave it down to central banks, probably the central bank, the Bank of Japan, or large exporters out of Japan, have been fighting this fall in this pair. You can see, though, that we are closing below it, and that does set up a fairly interesting situation. We know that it's only a matter of time before the Japanese get upset about this, although the Bank of Japan and financial ministers have been very quiet out of Tokyo. One thinks that sooner or later they would have to start jawboning this pair. Once you hear a statement like the yen does not appreciate or does not represent the actual value of the Japanese economy or something to that effect, you'll know that they're getting fairly close to intervening. Currently, we can't sell because we're so low, and we are just about 50 pips above this large green candle on this chart, which was the last intervention. But we certainly can't buy yet because we have no signs that they're even paying attention. I'm sure they are, but quite frankly, they just haven't done anything or said anything yet. We're waiting for that jawboning comment to start coming out, and then about a week or two later, they typically will intervene. So once we hear them complaining about this on a consistent manner, we'll start to look for supportive candles, 4-hour hammers, daily engulfing candles, that sort of thing. But in the meantime, this is on our radar for a quick intervention trade. But we think we've probably got a little ways to go before we hear that, unless, of course, we get some kind of sudden meltdown in this pair.